Ladies and gentlemen, welcome back to Walk the Block, where we are navigating digital finance, doing a bit of the usual Monday stream. How about that? It's the usual Monday stream. The rest of the gang had some other stuff coming up, but they will be jumping in shortly. Other than that, though, you got me, you got Uncle Z. What's more to love than that? All right, today we're going to be talking about everything time related. So, a couple of things I want to talk about. Number one, it's been a hot minute since we talked about 60-day cycles on stream, so I want to run through that. I think we have a new candidate for our cycle low, and I believe that we're pretty much on our second week of the new cycle, and we may have hit an important level when it comes to the amount that we've got up. Next up, we also have a macro calendar event to look at, specifically two. These are probably very well known to you guys. This is going to be the Federal Reserve meeting, and it's going to be our monthly inflation data. This next month, or this week and the next week, are going to be very, very important when it comes to all that stuff. And then after that, we also have the Genius Bill in Congress right now as we speak. That is what is going on with the Senate. We're going to be talking about where it's at, where it's going. But outside of that, we've got a bunch of other topics to talk to you guys about, including harkening back to the 60-day cycle stuff. How far along are we in the 4-year cycle? And how much time do we have left? It's already June. Believe me, I know the year's passing by very, very quickly, but it is what it is. And by the way, we do have one other person to get in here. Tracker, how you doing, buddy?
Hey, how do I sound, man? Am I okay?
You sound good.
All right, good. Doing well, man. I'm glad we could jump on. I'm excited about it. I'm always excited looking for Mondays, man, because it's just, when you're in crypto, you can't really talk to anybody that really understands it. It's pretty much it's pretty much us that can kind of understand it. I mean, without having you can't really talk about it like you really want to talk about it with everybody. You might have some friends and family members here and there, but they don't get it. They just don't. But yeah, I'm always excited. Always excited to get here, man, talk about it.
I will say, though, we are always trying to get more people up to speed so that we can talk about all these interesting things with them. And if people are interested in doing that, you should go check out walktheblockndf.com. That is our website where we host everything. And you can sign up for the membership in there. Once you get into the membership, we'll get you into our private Telegram, get you access to all of our exclusive content that is behind the paywall, daily market open streams, a lot of extra goodies, and we're building out our excellent video backlog, explaining everything from basic, intermediate to advanced. So we know the stormy seas might get a little rough out there, but find a good crew, sail it together. That's us.
Yep. Exactly. We've actually been talking with the members. Jay came back today. He's had personal things he had to address for the last week, but he was on doing some TA this morning. But he was still giving some tidbits of information to the members there, and we were getting a lot of information. Me and Dace were dropping a lot of good information and intel that were coming out through the last week. There was so much happening last week that I just don't feel like enough people were talking about it. But yeah, we were trying to let everybody know some of the deals that were going on and companies positioning and starting to really make some moves. So it's exciting. You're starting to see you're now at the point where you're looking at actual companies, who's making the moves now to try to capitalize on this early hedge against inflation. And they're starting to use it as such, not just Bitcoin. Ethereum's starting to wake up now too. Oh no, we lost Zenith. We'll see if we can't try to get him back on here for that time. But yes, one thing that was coming about that was really interesting. So for example, we were talking about this morning, one fascinating thing that was happening was, and this is the first time it's really happened. It's been in small scales with real estate, but in New Jersey, they recently started they're going to do 3,300 properties. They're going to start tokenizing them on the Avalanche network. I thought that was absolutely fascinating. We keep talking about tokenization. Well, this is an actual real world thing that they're doing. They're working with the governments. Not only are they working with the governments, they have a green light. They're tokenized. They're actually going to start tokenizing it. And they've realized it's going to cut out about 90% of the closing time, as well as paperwork, and that's actually a real thing. You can actually check it out. It's actually exciting. A couple of years ago, there were already companies in the real estate area that were already starting to tokenize certain properties, and so there were some beta going on, some little pockets of areas doing it. I know some real estate was sold and transacted through using Bitcoin, which is pretty fascinating. But this was at a much larger scale now that they have, real estate companies being, tokenized. And I thought it was interesting that they were going with Avalanche. So that was an interesting take that they would it on Avalanche Network. Zian, welcome back. I was just telling everybody about the tokenization of properties that they're doing 3,300 real estate properties in the New Jersey area, working with the local city officials, and they're going to tokenize those properties on the actual Avalanche Network. And they're claiming it's going to cut out about 90% overhead on closing time and also on paperwork, and they already got the government backing them. So you're going to start seeing pockets like that now. Now that these green lights have gone in, you're going to start seeing real world problems being solved by leveraging either cryptography or the on-chain ledger. I know, NFTs, people think JPEGs and all this other stuff, but no, it's an actual digital receipt. It's on a ledger. It's there. It's stamped. It's as long as the validators stay up and everything is staying synced with the validators, then it's an open ledger that everybody can see and track. And there's a lot of applications that can definitely benefit from that. So good and bad, unfortunately. So
it's both. I think we accepted that a long time ago, you and I, when it comes to all the crypto stuff. When you put things in the blockchain, there are things you can no longer do, like go back and rewrite data. But at the same time, having the transparency, the ability to access it, and just the openness of it, I think they more than make up for those problems. Especially when you have some good practices, good habits when it comes to actually implementing things on blockchain and doing those transactions yourself, you can mitigate those downsides as well. But I will say AVAX is an interesting one because I happen to think that AVAX is a little slept on. I think that they've had a lot of projects that have been working on the chain, and it's not just like whether it's like the real world assets, talking about the deeds, home titles, yeah, all that stuff. A lot of finance projects, actually, like large traditional finance, have been playing around with AVAX, and they're multiple chains because they don't just have one. There's multiple AVAX chains, and it depends on which one you're looking for is going to be better for different use cases. So I think that they've been ahead of the curve when it comes to that stuff, but at the same time, by the numbers, the adoption just quite isn't there for AVAX compared to like other ones like Solana or even good old XRP and Cardano. So
correct.
Yeah.
Avalanche did something that was interesting, even in the gaming world. They created subnets. So they have sub networks on the Avalanche network. So all the transactions would be not over on the overall Avalanche, but it would be its own network, but it's like a sub network. So when you would you could switch between the sub networks. So you could actually not basically narrowing down the scope of the ledger and the activity. So it's not just sharing it across the entire Avalanche network, but specifically it's Bergen County, New Jersey is the one that's doing, they're tokenizing 370,000 property deeds, approximately $240 billion on the Avalanche blockchain. So there a lot of people in real estate are watching that one. I guarantee to see, hey, how is it going to, a lot of people are going to sit back and watch.
Yeah, that's a good number of houses to actually put on the blockchain. 370,000.
Yeah, I was thinking 3,300. I thought when I originally looked at it. I'm sorry, it's a lot larger than I thought. That is a massive $240 billion worth of properties are going on the blockchain. That's a massive effort. That's a pretty large scale. You can consider this a proof of concept that everyone's going to be watching. And if they can pull it off, and if the governments can prove that it's cheaper and they can still make the money and it's less overhead costs, then everyone will start to probably go down there. I'm sure they'll probably have some hiccups and stuff, but that's why when you're first to market on doing something like that, you are going to run into some of the impediments that others are going to be watching deeply.
Yeah, that's just being the test platform. It's how it works. Everyone, I think, is used to it at this point. There's always going to be the hiccups. By the way, we do have a comment from an excellent audience member today, Agent J, one of our very own. He says, I think AVAX will be a premier gaming platform. I agree. They've been really courting the GameFi space very heavily over the last 4 years. There are a good amount of projects over there that have been launched, and I think that they're kind of like multi-chain. I guess the best way to put it is that it's all under the AVAX umbrella. It's all very similar infrastructure. It all uses the AVAX token, but it's separate blockchains that allows you to kind of do like that layer 1, layer 2 scaling stuff, but it's all under the same AVAX umbrella. So because of that, they're not experiencing a lot of the same issues that Ethereum has been experiencing when it comes to their little L2 dilemma. But yeah, AVAX, don't sleep on it for gaming. They've been making a lot of moves, and if you're into the GameFi space, definitely keep up with that chain and what's going on over there. There's a good amount of projects over there that are doing decently well. It bemoans me to say that GameFi has not been doing well this cycle, but That's neither here nor there.
Well, anything linked to Ethereum has not been doing well because we haven't seen, which we're going to dive into here in a little bit. But yeah, the Avalanche has been around for a long time. They do staking, they do gaming, they actually do a lot of things on the Avalanche network. So love them or hate them, they're definitely experimental. That's for sure.
That's very true. Very true. Alrighty, well, let's get into our first article of the evening. We would not be doing our jobs if we did not bemoan the issues that come along with centralized exchanges. So, coming to us from Cointelegraph, Coinbase says it's tackling frozen accounts in major issue. Improvements in Coinbase's machine learning models and infrastructure have helped cut the number of unnecessary account restrictions. What's going on here? CEO Brian Armstrong said the crypto exchange has reduced unnecessary account freezing by 82%, identifying it as a major issue. That's a big cutback, but at the same time, I'm curious, if you've cut it back by 82%, that's a lot of things that were identified and a lot of accounts getting frozen. So, coming to us from the June 6th X post, he acknowledged the account freezing has been a problem for longer than is acceptable. The issue is reduced by 82%. Already heard that. And he'll keep you updated on stuff coming out further into the future. Notably, they've also been having some other issues when it comes to the data hack and whatnot. But again, it's just more issues that they've seen over there. They even brought on extra staff to bring it on. So we have a tweet from DOR or Dorvon Levy. He says, joined Coinbase 9 weeks ago with a vital goal, fixing unnecessary account restrictions. If you're on CT, you know how significant this issue has been for users. I myself am a Coinbase user, and our restriction experience is not meeting my own bar. The goal is clear. Here was where we actually get some feedback from people that may have been locked out for probably too long, in my personal opinion. In response to Armstrong's X post, one user said they had been completely locked out of their account for over 2 years, while another said they abandoned the platform after an enduring 8-month freeze. Granted, these are just anecdotes and individual cases, but that being said, getting locked out for 2 years and even 8 months, a lot can happen in 8 months, let alone like 3 or even 1. I mean, crypto moves fast. So what do you think? Are we actually going to solve this issue for centralized exchanges, or is this just going to be the Achilles heel of centralized exchanges for a while as well? Not being able to trade when you want to trade.
I think it's always going to be an ongoing tug of war, and I think it's going to come down to, the simple answer here is it's going to come down to which government agencies are they leaning pro crypto or against crypto, as we've clearly learned. Pro crypto, however, in the environment we're in now, I think these barriers are going to come down fast. Keeping in mind, Dace posted that interesting thing where I thought they're going to start to really open up the entire DeFi. It's going to really help out DeFi a lot with people. It's going to be very pro crypto on that chain, which is very fascinating. I wanted to bring it up. Yeah, with Senator Chair Paul Atkins, was saying about self-custodian, and he's going to be building out more, basically greasing the tracks more for DeFi and self-custody, and be able to leverage those opportunities because they feel like it's your property. So that's a very aggressive stance. That's the most extreme crypto stance that it had, going full DeFi, telling us that we can basically do what we want to do because it's our property. That's quite a bit of an extreme pendulum swing. So, but to answer your question, I think these barriers are going to keep coming down. Did they get into the detail, like the deltas, like why each account was locked out? Was it due to, people making violations or things like that? But right now, Coinbase is trying to, Coinbase is trying to be the safe haven and your best buddy in the crypto world for the United States. They keep in mind, crypto just is paying back a bunch of their users who got hacked and scammed for those data breaches, right? You saw that coming out. So they're stepping in trying to, and they didn't have to legally, they didn't have to pay any of those customers a dime back because of the disclosure clause that was in there stating that it's, since that money's not insured currently, because crypto is not under that insurance umbrella protected. I forgot what's the acronym that protects it, but basically up to $500,000 can be protected, but crypto is not under that umbrella. So, and then the disclaimer that they have on
FDIC.
Yes. Well, the FDIC
Federal Depositor Insurance. It's not a corporation. I can't remember.
Committee maybe or something like that.
Maybe probably.
Something. So, but what I'm getting at is your crypto is not insured. So if you're on these exchanges, if you lose something legally, if you look at a disclaimer, they are not accounted. They don't have to pay you a dime. Now, Coinbase stepped in, keeping good faith, and wanted to keep that good, PR move. I thought was a very smart move by them. They're actually going to reimburse their customers and try to put them right. And this is another move they're trying to do. They're trying to move any impediments that's making customers, have any problems. So as a good business practice, you're looking out for your customers and trying to take care of your customers. And this is just another evidence of that. So yeah, they're going to start fighting this and pushing it down. Coinbase is already in there with the government for the most part as being the central hub for digital exchange platform or central exchange for the United States. And they're also partnering up with, who do you think most of these ETFs are getting their crypto from? Not just Coinbase, but they're getting a large amount of their Coinbase crypto from Coinbase because they're going to buy it off of the exchange. They're going to pull from the central exchange. So Coinbase has already built up all the relations is where I'm getting at. So any of these problems they're having with their customers, and Donald Trump has made it clear in this administration, they want to be the United States hub for crypto. This is just another barrier that they want to move as many impediments that they are to where get more mass adoption. This is just one step forward. So yeah, more barriers are coming down. That's all I'm going to say. If you're very anti-crypto and you're trying to push those narratives like you were during the past administration, you're going to be really an uphill battle. It's going to be like what it was trying to be pro-crypto the last 4 years prior to the administration that took over. Love them or hate the administrations are relevant. What we're trying to get at here is the previous administration was everything you could possibly fight crypto on, you fought it on. Now, polar opposite. So
very true.
That's where we are.
Yeah. One of the reasons I wanted to bring up this story is just it's a good reminder for the folks at home and do a little of the 101 level content, which is understanding some of the pitfalls with centralized exchanges. This is one that is not talked about a lot. Granted, we usually talk about how not your keys, not your crypto, which means that if the exchange fails, well, you pretty much lost everything. And additionally, if they get hacked, well, that's also kind of your stuff getting hacked too. And then finally, if you're not interested in the know your customer information and providing all that stuff, well, unfortunately, centralized exchanges are going to need all of that. But the thing that this story highlights that is not usually highlighted when it comes to one of the cons of using centralized exchanges is that you're trading on someone else's platform. We're not trading on the blockchain. They have access to the blockchain. They usually have access to many blockchains. I know that one of the things that I'd like to do is whenever I move money between some of the centralized exchanges, if I'm just moving like USDC, which is an ERC20 token based on the Ethereum network, you can actually have it set via different networks, but because the exchanges kind of like operate on their own little level, they'll just credit it to you and then just be like, yeah, it's on Ethereum. Doesn't matter that you send it through Polygon. But the key issue we're talking about here is that because you're trading on someone else's platform, it doesn't mean that you're going to have access all the time when you need it. There's a bit of a tinfoil hat theory going out there that sometimes we have these mysterious downtimes or maintenance or just hiccups and errors whenever there's key points in the market going on, whether it's a very downtime, which people are looking to buy, or whether crypto's just pumping significantly, people are looking to take profits. If you get locked out, even if it's just temporarily for a few minutes, that could be the difference between a large chunk of money, to be honest.
It's a good point. And just to show you what we're talking about here is if you go to, say, I don't know, the Ethereum network, like, so you look at the on-chain data, you can see all the transactions and ledgers and all the activity that's going on between addresses. But what you don't see on there is the central exchanges, because once all that crypto gets sent to their addresses, it's off the ledger. Now you're basically sending it to them. Now you're basically back into TradFi world where they're controlling everything internally and moving everything around on their databases and everything internally that you're not going to see, nor are they going to show you any of that information because they own that. And most people don't understand this too. Now we've talked about this many times. Is just like a bank. You're not going to see the internal workings of a bank. Think of a central exchange like a bank that's off chain is how it's treated. And if you put your money in a bank, you don't understand this, but it's not your money anymore. The bank owns it. Just like these central exchanges, they own it too. You don't own that anymore. I don't care what people want to perceive. You don't. Matter of fact, so when certain things come into play, like if there's, I don't know, There's been countries around the world that have certain freezes, right? You're limited to what you can take out. I know during COVID, there was actually some times where some banks were limiting users to how much you could take out, $100 at a time during a day. I know in Greece, when they had their lockdown, I think it was 75, equivalent to about $75 you could take out a day. And those limitations are there because those are you, when you give your money over to them, you're agreeing to their terms. And this is no different. You're handing it over, and in return, they're telling you that we will protect your stuff for you, right? That's the partnership. That's the trade-off. But like what Zenith is saying, and it is true. It's really funny. Anytime there's these massive move, whether it's a massive pump in the rally that day, I'm talking a big move. Today was a pretty nice move, actually. So something like that, we were seeing that, or major dumps all of a sudden, not just like one central exchange, it would be many central exchanges all of a sudden are having network problems and they're down and customers are complaining. Now, could that be intentional? Possibly. Could it be also linked to a flux of just too much activity and their networks can't keep up with it and everyone's stepping on each other? That's a possibility too. Bandwidth, you're basically you've hit the threshold on their networks. That's a possibility. So, but regardless, if you want to be able to control your stuff, you need to do it. Now, central exchanges are great for other things. So, say you're on the Ethereum network and you want to trade Ethereum tokens, and you don't want to get destroyed by fees. When Ethereum networks it was expensive because of the gas fees. On central exchange, you don't have to worry about that. You might have a small little fee to transfer coins, but it's minuscule compared to what you're going to pay for the transaction fees on the Ethereum network when the gas fee is really high with your GUI. So there are good opportunities to use it. It's just another tool out there. You can use it for onboarding, offboarding, for cutting out fees, or those are two good examples. But ultimately, you don't want to keep all your stuff on a central exchange for the reasons we've already outlined.
Precisely. Well said, sir. Alrighty, tell you what, let's keep this show rolling. I got another article I want to bring up here. We have a big tech is considering adopting stablecoins as the Genius Act debate continues inside of the Senate. So, quick update. The Genius Act is now on the Senate floor for debate, discussion, whatever you want to say. It's also going into the open editing period effectively. So, Genius Act originally went out of committee, got out of committee in the Senate successfully. Now it's on the Senate floor. This is where the next hurdle that it has to get over at this point. There's going to be debate. There's going to be potential changes made to it that are proposed. And if that's the case, it might have to go back to committee. But the point is, it's making its way. What this article is talking about here is that there are some obstructions going on, and then there are also outside players looking to make moves before this stuff actually gets going through. So, to the article. Market capitalization for stablecoins has risen 90% since January of 2024, year and a half ago, making stablecoins arguably crypto's first mainstream use case. Growing momentum, the United States stablecoin regulation is reportedly pushing major tech firms like Apple, X, and Airbnb to explore digital token integration. According to a June 6 report from Fortune, at least 4 tech companies, including those listed above, are exploring stablecoins as a means to lower fees and improve cross-border payments. Each company is in a different stage of implementation, with Google perhaps the farthest ahead, having facilitated 2 stablecoin payments already. I'm going to go ahead and skip down just a little bit of data, but here we go. Genius Act sparks debate in the U.S. Senate. Otherwise known as Genius Act is one of the developments pushing companies to explore digital assets. The bill seeks to provide regulatory framework for stablecoins and their issuers in the country, but has been met with debate about big tech's potential participation in the crypto industry. According to the New York Times, Republican Senator Josh Hawley recently said he would vote against the bill in its current form, as it would allow tech companies the ability to issue digital currencies that would compete with the dollar. Democrats plan to add an amendment that would ban big tech companies from creating their own stablecoins, according to the New York Times, citing a person with knowledge of this plan. No direct source, so take that with a grain of salt. The move would force tech companies operating in the United States to use established stablecoin companies, including Tether and Circle. So there you go. That's the development that we have with this, is that big tech is looking to potentially launch stablecoins, and it seems that the powers that be might not like the ability of other people to launch more stablecoins. Tracker, any thoughts why that might be? Why wouldn't they like more competition to the dollar?
No, because the banks want to centralize. They want to keep their control. So this is exactly what it is. The bank runs the world. Don't get me. Don't. I mean, really, let's just call it what it is. The banks run the world, and these companies, regardless if these companies are doing it, they own them in one shape or form. So it's almost like a moot point. To me, this is theater at this point. Circle just went live on the New York Stock Exchange. right? BlackRock is backing it. BlackRock being one of the big three with State Street and Vanguard. They pretty much control everything when it comes to anything financial, and certainly all the stocks and everything. So at this point, it's just a moot point. It's just a matter of time before this gets passed. Yeah, there might be some tweaking here and there, but they're going to back it. The funny piece that I think is the 100% reserve backing. There are so many things that they'll say that they have 100% backing. What that means is if they have $100 in stablecoin, they must show on their balance sheets that they own $100 of whatever asset that backs that stablecoin. Who's going to be regulating that? Themselves? Like the banking committee regulates themselves? I mean, what I'm saying is I really want to know who's going to be regulating and making sure that happens, because the derivatives market tells us there's more money in derivatives market than there's in circulation by about 100 times, about 100x. So that's not being regulated by any stretch of the imagination. So who's going to regulate this is my big key. And keep in mind, when Trump got nominated, you saw how much stablecoins kept getting printed and how much money kept coming in and how much that they kept printing more and more stablecoins. So they're already teeing it up. Now, since Circle is gone now live on the New York Stock Exchange, so normies are going to start getting into that stock heavily, and it pumped dramatically after the IPO. You might want to wait for it to calm down a little bit, FYI, not financial advice, but I would say that's if you want to have some exposure, that's a good way to get into it. Like having some of these plays like that as a if you have a 401k or other assets that you cannot get into crypto for whatever reason, that's an option. Of course, there's ETFs out there you can that spot for Ethereum and Bitcoin. But where I'm getting at is, who's going to regulate this? Who's going to make sure those things are? Is it going to be the crypto czar and the crypto committee? I'm assuming they would be probably part of that regulation to make sure that doing it, because who's going to be doing the it's kind of like Fort Knox. They say how much gold's in there, and well, they haven't had an audit on that since 1970s. So I'm just saying, like, who's regulating this stuff? But it's a moot point. This is going to happen. Stablecoins will start to be used to actually start buying things and moving in. There'll be a mass adoption to this. They're going to push it heavily, because the reason why that's going to get pushed heavily is because of how many big players are already involved in this. And our friends with Coinbase we were just talking about, they're right in the middle of all this, because they're going to be helping also issue in a lot of this stuff. So, and then also the big caveat here that's massive, that to me was an eye-opening experience when I saw, I think about a month ago, when they were saying that they envision stablecoins will be the largest consumer of U.S. treasuries, one of the largest ones. That's going to be coming out pretty soon. That's going to be a big game changer. So they're going to be using stablecoins to help buy up a lot of U.S. treasuries. And I don't know if you saw it, but in our members group, we're talking about how, I think Dace posted it, and I thought that was a fascinating post, that supposedly what they were talking about was United States is looking to issue more than $10 trillion worth of treasuries this year alone.
That's
I don't know. I don't have necessarily the backing on that one, but at 10 trillion, that's massive, because they're having a huge problem. Nobody wants to buy U.S. treasuries. So how are they going to get rid of this U.S. treasuries? One option is they are going to start using stablecoins to buy these treasuries. So maybe it's just a simple of migrating or moving around debt. Is what it kind of looks like. So I don't know how this is going to look. If that's the case, then the stablecoins will be using to buy those treasuries.
The treasuries note is a very interesting one, because can you remember a current event or a news story that we covered sometime, I don't know, in the last 2 years, where some large institution that was holding money and integrated with crypto had a ton of treasury bonds, and then when the yield curve went to crap, they had to default, and those banks failed. Do you remember? Do you remember which that was?
Talking about Silicon or the Valley? What was it?
Yep, Silicon Valley Bank and Signature Bank. That was in the last 2 years.
Those were two threats, so they had to take them out. It's funny how those two got taken out, because they were threats. They were the largest bank issuers of crypto, and they were right there in the hub. So they needed to take them out because that was a threat to the banking industry. So yes, got them out of the way.
The point that I'm making here, though, is that the issue is that they were holding T-bills, and the yield went poorly for them. And that's what caused them to default, if you're trying to take the less adversarial stance on that. So when we're talking about saying that you have to hold 100% cash reserves for stablecoins, if people are interested in trying to get a little bit of yield to hedge inflation on that through, I don't know, T-bills, it seems like this might just be the same thing again. I'm
It's
just
it's
saying.
it's yeah, it certainly is possible there. I mean, certainly. So here's the bluff. The bluff is the stable coins are expected to basically be used to do basically transferring of debt. U.S. Treasuries will potentially lead in a significant shift to the ownership of U.S. debt. Stablecoin issues like Tether and Circle are required to hold reserves of liquid assets, including Treasury bills, to back their tokens. Key Treasury bills to back their securities. If stablecoins market grows substantially, as much as people suggest, stablecoin issuers will need to purchase more Treasury securities to maintain their reserves. So if you want mass adoption and these stable coins want to keep growing, then the agreement's going to be, then you're going to have to buy these treasuries over here to keep it going. So this is basically a way to just transferring of debt over to the stable coins to basically get these treasuries to be bought because nobody else wants to buy them. So to me, it's more of a threat is how I look at it, the stable coins. That's what I'd be careful about.
If I had to put this on the balance sheet somewhere, yes, it would go in the liabilities section, aka high risk.
Which is fascinating because remember when MicroStrategy had all that crypto on their balance sheets and they were not allowed to use that as they weren't really allowed to it was more of a threat than it was a liability than an actual asset on your balance sheets. And then all of a sudden they changed it. Now, if you have it on your balance sheet, now you can show it as an asset. That was something that changed recently. That was huge certainly for MicroStrategy because they have so much, but any company who owns it on their balance sheet, they can actually now use it. And funny enough, I know I've brought this up many times, but just because it's on the same topic we're talking about. So if you look up as a 401k and you're looking for ETFs, before the spot ETFs were created, Bitcoin and Ethereum, yes, there are other future ETFs you could own and had, and some of those were Bitcoin and some of those were Ethereum as well. And some of them tracked the asset very well, actually. You had to do your due diligence to find them because there weren't that many to really track. I had to do a lot of work, figured that out. But as I was going through that, 85 to 90% of all crypto ETFs that they call crypto ETFs are actually hold US Treasuries. A lot of them are. So this has already been instituted by TradFi for a while. Now they're just kind of speeding it up to try to move these into into stable coins. Now, ultimately what they're trying to do is who is going to buy our bags? Who's going to buy our US bags? And that's what the debt is. And now this is a way to try to start moving over into the stable coin area. So that was one concern that I had about it, is because nobody wants US Treasuries because they keep inflating them and inflation keeps going up. Nobody wants to buy it. Now they're going to move it into stable coins. Is that good for crypto? I don't know, man. I don't think so. But to me, it's just another way to rebrand their debt and to make it look like someone's buying their treasuries. So I don't know.
Well, to channel a little Thomas Sowell, in economics, there's no solutions, only trade-offs. So it's going to come with pros and cons. We just got to figure out what they are and understand how to mitigate the risk or the downside potentially. Alrighty. Well, I think it is time. I want to hit the big one, if you will. I want to talk about the market in general because I think we've had some interesting developments, and it's also been a hot minute since I've given my take on this stuff publicly. I know a lot of the groups, a lot of the DMs saying, where'd this guy go? Well, we're back and we're here to talk about 60-day cycles. So we just had our recent daily close. We actually closed at about $110,000 and 500 for Bitcoin. And you might notice that this forms a very, very nice looking cycle low for the past one. We've been arguing nonstop about where that potential 60-day cycle low was going to end up. And I think this is a definitive answer on it, especially considering the move towards the upside. To do my best Agent J analysis here, pull up my Fibonacci's. You might notice our favorite 886 fib level was hit today, meaning that I believe that there's a very good probability we're going to the upside. And because we have a very good probability that we're going to the upside, it gives me more reason to believe that, yes, this is going to be your cycle low. The reason, another reason I say it's going to be your cycle low is because we actually broke down below this area over here that we had between the 8th and the 19th. Notably, we did have that wick down to about 100,000 and change, and that was what really did it for me. And then the move to the upside here, that was the cherry on top, really confirming it, especially considering that we did move above our 20-day moving average. We came up, tested it once, broke down, came up, poked at it, and then blasted right through it. That's the kind of thing that shows me that we do have some good momentum towards the upside. especially considering that all of the moving averages are also in alignment now, meaning our 20-day is higher than the 50-day, which is higher than the 200-day, meaning that the overall momentum, at least for pretty much like the last 3 months at this point, is towards the upside. We did have our all-time high here back on the 22nd of May. So excellent news there. And then if we want to just zoom out a little bit, that's where we're at in the cycle right now. There's our old all-time highs. Here's where we're at right now. You might notice that we are 187 weeks past since our last all-time high. Now, please correct me if I'm wrong here, but I'm pretty sure the magic number that we're looking for here is 208, because that will be 4 years. Or if you're the 3-year and 11-month folks like I am, that means that the number we're looking for is about 204, meaning we only have about 17 more weeks to go until we are going to reach that 4-year mark, or that penultimate mark, which I try to track myself, which is 3 years and 11 months. With that being said, we're getting pretty close here. So if we are only 17 weeks out, 17 times 7, that's going to be about 109 days. If we break that down, we pretty much have two more 60-day cycles to go, including this one, before we start looking for those cycle tops on the macro side of the house. That kind of stuff gets me asking the question, where are we at? What's the timeline looking like? Where should we be positioned? What are you looking for? Tracker, what kind of things are you taking into consideration when it comes to the 4-year cycle right now?
So we talked about this morning with Jay on the DGen roundtable. And the one theory that was, that was brought up was like, the concern is, are you still going to have people complaining that you're at a double top, right? Is it the double top? Or are we going to potentially roll over? So that's one thing that needs to be considered, I think if you're looking at the times like you just laid out, that I don't think he nor you nor I are at that camp where we think this is topping out for many reasons. I think there's so many headwinds that we work through from the macros. And we outlined all the U.S. regulation, blah, blah, blah. Tariffs seem to be finally starting to get some resolution. And even when the tariffs do come on, their shock is not as bad. People are like, okay, here we go, another round. We're going to have to wait what week or two, and there's going to be some resolution. Or all this. So people are starting to digest it. And how do we know it's digesting? Because the VIX is down at 17. When the tariffs first hit mark, we spiked all the way up to 60 on the VIX. And we stayed above, well, a lot of people look at the 24, 25 level. We were, for multiple weeks, we're above it. So true panic in the market. That panic has now come out. So everyone seems to be pretty calm right now. Everybody feels like the inflation is getting under control. The Fed's, there's talks obviously that, there's some rumors that Trump wants to get rid of, replace the Fed and all this other things. All right, that's just theater, or if it does, whatever. What I'm getting at is the macros are getting out of the way. Macros are starting to get out of the way. More people are hoping that cuts are going to come in. Bad news for the economy is actually good news, because people feel like that's going to trigger the Fed to take action, and Powell's going to have to start cutting rates, or maybe even get more aggressive. That's why when you saw some negative news last week, that on the jobs market, that people really weren't panicking. There wasn't really dump off, because people are starting to look at it from that case. So it's that classic, bad news is good news. On the technicals, we need to see more volume coming in. That's what I want to see. And I think that's the big caveat. I know Jay and all of us were saying, we want to see that volume coming in, because now you got that conviction coming in where people are like, okay, I'm not sitting, I'm not waiting, I'm going all in. So that's kind of how we're looking at it. Now, on the Ethereum side, we finally closed right at the top level on that sideways action. Now we're breaking out above that. I would love to see this current candle close above that, because that would be the first time we'd seen Ethereum close above this magical 2,681 level, which seems to be resistance for a candle to close above. Don't ask me why, but that's the line in the sand. That's where the technicals like. We want to see
have an answer for you.
That. Well, I'm sure I'm pretty sure the shorts and the puts, the puts and the calls and all this are trying to battle it out, and there's probably leverage going on at that level, something like that. But that seems to be the line. I think
it's simpler than that. It's the 200-day moving average. That's what I'm tracking here with this red line.
Go.
Look at that. Every time we come up retesting it. Look at that.
But it's
yes,
weird,
you were correct. We did have our close above it.
But it's weird. It's exactly that 2,681 level. Like, I mean, to the number I just told you, 2,681. If you look at that, it's a perfect line. It will not close above that damn line, and it's driving me bonkers. And then the wick we had on the wick that we got on June 4th, it literally intraday hit that level and we got rejected right at that line and came back down again. It's just that odd number. That number in the line is the same. So now we're pumping above it. If we can get this current candle to close above that, that would be the first time we've closed above that line since then. That's a little positive for momentum. The ETH and Bitcoin ratio still is forming a bear flag. I mean a bull flag. Sorry, bull flag. We're still getting that bull flag there on the ETH and Bitcoin ratio. So that's still gaining momentum. So that's looking good. Bitcoin, I would love to see it break out and hit an all-time high. You could have some profit taking, but hey, if you get some macro news that comes out, because people are trying to front run what could potentially coming out. I know China and the EU are in discussions right now. There's discussions going on with the tariffs and things like that, and there's other discussions going on with China and US. So if we get some more clarity, like we always talked about, markets hate uncertainty. So we get more clarity here. I mean, that might be the final push to send us higher.
That's true. When it comes to making new all-time highs, I'm right there with you. I think that at this point in the cycle, we should be expecting new all-time highs somewhat regularly at this point, especially considering we realistically only have like 4 to 6 months left for the 4-year cycle in 2025. And to make an all-time high, all it would take was pretty much just a daily fluctuation. We just got to get up like $2,000 in the Bitcoin price and you're there. Like, boom, done. That's less than a 2% fluctuation. That is a daily fluctuation that we can see. And considering the last one that we had, I'm pretty sure just over the last day we had, was it like about 4.6, almost 5%. So yeah, that's well within reason now. You did bring up something earlier, which I thought was interesting, was that volume. Because if we go look at the volume candles down here below, we've had a pretty good increase here, but these volume candles aren't even beating some of the volume candles of the past month when we're going through the rest of the cycle here. That kind of stuff is a bit of an oddity to me. So like when we made our last 60-day cycle low here, we had a lot of volume coming in through these candles, and we continue to have a lot of volume coming in through the rest of the cycle. So far, the start to this cycle, the price has been moving pretty good, but the volume just isn't there quite to back it. And one of the other things that gives me optimism for a potential all-time high is that we're not even in overbought territory when we go look at the RSI. So this guy down here, if we're still in this purple zone, that's still pretty much in the middle. When you see large gaps to the upside or the downside, that's going to be when you're outside of this, either in that overbought or that oversold territory. So we came back up, we're approaching it now, but we haven't gotten there yet. So if we can spend a few days in that overbought territory, I think that's where you can see some of that real price appreciation happen. We can see a big move towards the upside, looking at levels like maybe 125K. And if we get really wild, maybe even 135 or 140. That stuff I think it's realistic at this point in the cycle. And to see that kind of action going on in the near future, it's almost expected at this point, in my personal opinion. I will say it's funny that you beat me to the Ethereum punch, though, because I was looking at that and I was like, oh yeah, that's nice. We have a candle above the 200-day moving average. This could be a nice rally, especially if we take it into consideration with the fact that Bitcoin did just start a new 60-day cycle. If we continue to get more motion to the upside, which I believe that we will, then leads me to believe that we're going to see Ethereum start making moves towards the upside as well, get past this little resistance area, and then start moving towards those upper levels. And we could even see Ethereum make an all-time high. I'm not going to say in the next few weeks, but maybe the next month or two. I think it's a distinct possibility. Granted,
don't tease everybody, man. Don't tease everybody, man. A lot of people are waiting for this one.
I have been teasing people for like 2 years on Ethereum. Every time, if anything, I'm like the Jim Cramer of Ethereum, which is I'm like, oh, Ethereum's starting to show some promise, and then it breaks down again. Look, the main point of what we're talking about here and why we're not just doing some crazy TA today is that timing is the name of the show. Talking about timing when it comes to stablecoin bill, timing for the market, timing for ETFs. So we have time to hit that story later coming up. And we also have timing coming up for some macro events, because keep in mind, we have inflation data coming out. I want to say 2 days from now. That's going to be on Wednesday. And then next week, we actually have the Federal Reserve meeting. And on that one, it's actually an important one. Well, they're all important, but this one's especially important to the nerds out there because they're going to be releasing new projections and updates of their forecast for the rest of the year. So It's not you don't get it every time. You get it every other time. So those are the ones that I really pay attention to. When it comes to the market right now, it's what we've seen is that there's good. All my data rolled over for the day, but on average, I saw coins going up about 4, 5, 6%, and it looks like we're having a little bit of a correlation with Bitcoin for the rest of the market right now. So everything is looking at Bitcoin. A lot of the Ethereum based tokens, I think, are going to be following Ethereum. And if Ethereum can actually start following Bitcoin again, finally, then we can start seeing the rest of the market moving up as well. There's a lot of stuff going on right now. And I think that right now, all the indicators I'm looking at are pointing towards the upside. Any thoughts?
The same camp. I'm in the same camp. I just keep coming back with volume. I want to see that volume. I want to see volume. I really want to see it. Maybe I'd love to see a combination of a massive volume day and a breakthrough to all-time highs on Bitcoin, and also see Ethereum just absolutely mega outperform Bitcoin, like a 2-to-1 outperform on that breakout with more volume coming out of Ethereum, at least to ratio on the volume. I would love to see that. I would love to see that kind of violent move, because that's going to really be that's going to be it. And then once things like that start getting going, and it could happen, right? We get some positive news here, and not just that, but in correlation with the overall stock market breaking out to all-time highs, because you do want the macros. And then of course we want to see the Russell 2000 break out all-time highs. If we're getting all those indicators, then yeah, it's going to be hold on, buckle up, we're moving quickly. And then you'll have other things piling on, like who knows, maybe then the crypto committee comes out with details on what crypto is going to be in their basket, and more details behind it. That would just absolutely fuel it even more. So yeah, there's a lot of interesting things that could act as catalysts, but sooner the better. We're all getting frustrated. I mean, to me, the funniest thing I saw was the meme. Dace had posted it and was hilarious. It was the meme where it was 2 giant women fighting, these monsters, and they were fighting, and then somebody was sitting there watching them. And it's like me just wanting the altcoin season to start while you got Trump and Musk fighting. It's like, come on, can we just get altcoin already season finally? Like, this has been brutal. So yeah, those are probably the indicators I'm looking for.
I agree. By the way, real quick on the traditional finance note you brought up there, the S&P 500 is actually looking pretty good. We are literally just like a hair under 600 right now. And ever since we had all the tariff news come out, that looks like a pretty strong recovery to me.
It's even better if you look at it. You're in a perfect up channel. Like, you could literally draw a perfect, I've got a channel here. I was looking at the channel, and you actually have a perfect channel going upwards to the left, to the right. And then you have that channel. It's forming right there. There's your channel that the S&P 500's in. Now you're coming up against resistance to the recent high. You're looking for that breakout above. You got to get that breakout above. And here's the other thing. People are like, oh, you could have a top, you could have a trouble. Well, here's the thing. Every time this thing has come up here in this area, you've had it lingering once, twice, 3 times. Now here you are coming up on the 4th time, coming after it to try to also keep the momentum going. And like I said, you have a lot of reasons that would cause us to traditional finance. Yes, I know the sell-in may walk away type thing, but here we are in June, right? We're already in June. There's too much uncertainty that has got us to this point. Could bad news come out? Yes. Could a war trigger? Yes. You could have some. You're going to get these flashes that could come out. Certainly. I'm not saying it's a straight up shot, but those are opportunities to buy more to it, because I feel like there's more positives than bad. Now, ultimately, what's going to come home to roost that everyone's always been talking about is eventually the debt's going to have to be taken care of. You're not going to be able to just keep compounding debt after debt after debt. Eventually that's going to have to come home to roost, and that's going to be a violent move when it happens. But right now you have the cycles in place. We're in a new cycle. That's what I was going to come back to. So what's your thoughts on, we're in a new cycle on the 60-day cycle. Are we so what's the thoughts on that? Are we an extended cycle, or we're in a new cycle? So what's going on? Right translated?
I think it's just, I expect more normal cycle things to happen, as dumb as that sounds. We had a 59-day cycle with, like, what was it, day 47 high. So a bit of a right translated. It didn't go like super far when it comes to the day count, but hitting day 59, that's square in the middle. So that's nothing too crazy. If anything, it's just signaling maybe just like a bit of a, I don't know, short cycle on the end there, which is people might have been expecting more downside, but then it reversed. So if that's the case, and it shows me that there's a lot of momentum towards the upside. So
let me ask you this
personally,
on the let me ask you this on the TA with this violent move that we've had since basically June 6th. It's been a straight just catapult move in Bitcoin. Are you still thinking there's a continuation, or do you think we're going to now have a pullback and that's going to be a potential wave two? Or I'm more curious about that. I'm more on the counts.
as far as the action going on, I think that everything is pointing towards the upside. I think that we're going to continue towards the upside, considering we had an explosive push through that 20-day moving average. And the other thing is we came down and we retested that 50-day moving average very, very nicely, and then came back off of it, didn't even break down below it. This is the kind of stuff that signals to me that the momentum in the market is definitely towards the upside. These are the indicators that I look for that, whether it's the fanning, as Boogie likes to call it, of the moving averages, which is if they start to actually stack up correctly and then maybe start to spread out a little bit more. So if we see price continue to go on, we're going to see that even more pronounced here with the 20-day moving further above. 50 is going to continue to move above, and the 200 is our slow guy. So he's just going to kind of continue to keep chugging upwards, but the rest of it's going to be moving towards the upside. As always, it's a 60-day cycle, which means there's going to be a cycle high. And at that point, you probably will get some pullback, or you could even get a little bit of pullback along the way. But overall, similar to that channel that we saw when it comes to the S&P 500, you can still have these dips and these pullbacks, but the overall trend still up and to the right.
All right, fair enough. Sounds good.
Hey, if I didn't answer it, like, please tell me. I'll try to elaborate more, but just try to keep it simple enough and just use enough of my tools to get the holistic picture.
The bluff is this: we're all on pins and needles waiting to see if this thing's going to break out to all-time highs and not tease us to leave that narrative. Oh, it's a potential double top. We want to see that breakout and close above it. That's what I want to see. I don't want to be here toying with this for the next couple weeks here. Oh, is this a double top? And having to go through that whole narrative. I don't want to hear that. I just want to see. I'm not going to say a straight up breakout move, but Ethereum itself, I just want to see the damn candle close above that level I was saying. Can I just get that?
That's true.
Then Bitcoin, if it could hit all-time highs, great. If anything, could it just chop sideways up here and see Ethereum take over more of the share and move? That would be, I'd love to see that actually more than anything.
That's true. Tell you what, I'll try to give a little bit of the other side of the coin here instead of just being the guy shouting on the rooftop, Bitcoin is only ever going up. So I would not be surprised if we saw something looking like a candle over the next day or two, which like flirts with all-time high, doesn't quite get there. And then we have like a 2 or 3 day lull where it kind of goes and bleeds a little towards the downside. But then, like we talked about earlier, I think if you get a lot of volume, that's going to be the thing that really pushes it above and keeps this going towards the upside. Because right now, this could be normal market fluctuations. It could be a start of something, but until we get a little bit more volume, I'm not going to say that we're going to start giga pumping just yet. Volume is the name of the game. That's how we move and get to those higher levels and break through those support and resistance areas. Alrighty. Well, before we get out of here, we still do have a good amount of time left on the show. I do want to bring up stuff I mentioned previously. There we go. From the U.S. Bureau of Labor and Statistics, June 11th. That's the date to watch. Watch the S&P 500, watch Bitcoin, watch the news. That's what's going to be coming out. Previously, we were sitting at 2.8% for the year. I would like to see that come down. Inflation is always higher than we would like, but you've been hearing us say that for like 3 years at this point. Additionally, the other one, June 17th and 18th, namely the 18th, because that's when we get the fun Jerome Powell talk and we get to dissect all the stuff that he's not saying, but kind of hinting at, and then also get a good insult at a reporter or two if they ask a really dumb question. So there you go. Your WWE featuring Jerome Powell, June 18th. But outside of that, final news article I want to bring up. Active meme coin ETFs have a good chance next year, says an analyst. So diving into the article real quick, current meme coin market capitalization is $60 billion, more than Tron and Cardano combined. May not be long before Americans see the first active meme coin focused ETF, according to the Bloomberg ETF analyst. There is a, quote, really good chance that an ETF actively trades meme coins will exist at some point. We first saw a slew of active crypto ETFs, and adding that an active meme coin fund will likely emerge in 2026. So The reason I bring this up, if you've been following the show, you know that we talked about these are possibilities for late 2025. I think a few weeks ago we did a show talking about how there's the XRP, Solana, Cardano, even Dogecoin got lumped into that one. Additionally, with the Ethereum staking ETF approvals, those are right now are lining up for late August, September, October. That's the time frame for those. The next speculation is, well, when are we going to get the meme coins? When are we going to get the Dogecoin ETF? Now, what we're seeing here is that it might not be as soon as you think it is. So Polymarket odds dropped to 44%. So back in February, there was a 75% chance that the SEC will approve a spot Dogecoin ETF this year, but the odds on blockchain prediction platform Polymarket have fallen to 44%. It's still pretty much a coin toss, but at the same time, it shows a trend, which is that based on everything going on, I think things are taking a little bit longer than people were expecting to. So when it comes to ETF approvals, including the meme coins, which are, I don't want to say inevitable just to jinx it, but everything is pointing towards people want more ETFs. We've pretty much covered the majority of the top chains out there. And then as soon as you dig a little bit deeper than that, that's where you start hitting things like Dogecoin, Sheeb, and even some, if you want to get crazy with it, there's even some lower level stuff like the Solana meme coins, or even stuff like Pepe. So that's what's going on there. They do point out that the meme coin bubble did peak in January and has deflated since, down about 70% since peak prices. But ETF might be the thing to do it. Or, I know we've been harping on it all show, volume, baby. If you just get some volume, guess what moves quick? Low market coins. What are low market coins? Meme coins.
All right, so I gotta correct a few things that this article is missed. So they don't mention anywhere in here that Grayscale launched its Dogecoin Trust on January 31st of this year already. It's called it's Dogecoin Trust. It's an ETF that's out there. There's other listings that have gone on. So Dogecoin, various firms have filed applications, but no launch date is yet. See, some of this stuff is a little messed up, but I can tell you on January 31st, 2025, Grayscale launched Dogecoin Trust. Shortly after, on the same day, Grayscale filed to convert this trust to a proper spot ETF. So right now, they're trying to make this a spot ETF. There's already an ETF for Dogecoin already, but they want to make it a spot. So I think that's interesting. And that's out. That's still being listed and waiting for application. The Trump ETF application has been submitted for that one as well. And Bonk ETF has already been submitted as well. So that's waiting for clearance also. So I think that's pretty interesting. But what I would say is this. Once they come out with a meme coin ETF, if they're talking about like next year, that's the top. I'm gonna call it now. That's the top. So think of how bad people got wrecked in Solana. When it's going to get real frothy like that again, like in December when everybody was just jumping in all these meme coins on Solana, and it was just chaos. That end of Q4, that was like a Christmas time for meme coin people, especially on the Solana network. And actually, on a side note, the Pulse chain meme coin was making a lot of good trades over on that area too. Now, Pulse chain was interesting because there was meme coins coming out. People were making a lot of money off and on that. There were some serious pumps going on. So I know Pulse chain was a little under the radar for many people, but Solana got all the love. But yeah, there was a lot of activity happening on Pulse chain. And I think a couple other pockets there was happening too. But Solana got all the attention because it just had the massive scale that was in. And then of course, when Trump launched his meme coin, then that just took full front center on everybody. But I would say this, when they start coming out with ETF on meme coins, I would say personally, if it was me, depending on the time, if we're talking Q1 or Q2 of 2026, that might be a great thing to short. Is there an inverse ETF on that one? Give me the inverse ETF on those. I'll take that. I'll gladly take those, because think about it, most of those meme coins go to zero, right? So depending what's in the basket is what I'd be interested to see. Now, if it's the big ones, the big market cap meme coins, okay, I get it. That might be okay. But if you're giving me just straight up degen meme coins, yeah, give me the put puts on that, or get the inverse ETF on that. And on another side note, since we're on ETFs, I started seeing filings already for. There's already 2x leveraged ETFs already out there. So leveraged ETFs, people don't understand how they work. They reset every day, meaning if you ultimately, and institutions did this when they first came out back in, what was that? What was it? 07, 08, 09 is when they came out. It was right around the circuit breaker rule came out. I know they were out during the financial crisis. So they may have been out in 05, 04, but they had leverage ETFs. These are 2-3 times the move that the regular ETF makes. Some of these were ridiculous moves, like kind of like how crypto moved. It was like that when the financial crisis was happening, those things were bouncing like crypto. That's basically what it was like. Anyhow, these things reset. So the institutions like to come out with both of them, the inverse triple leveraged ETF and the regular ETF. And what they'll do is they'll short them both, because the way that they calculate, they reset every day. So they both just over time work their way to zero. And then what they'll do is they'll do an inverse split to make the price go back up again, and they'll just keep moving down to they essentially both move to. So if you put puts on both of them, and they will, you'll see these leverage ETFs. You'll see institutions come in and they'll just put all the puts on them to where you can't even get them because they've maxed them all out, and it's just easy money because it's even though you might lose some on one, you're going to gain more because it resets. So you're over time, you're just going to keep making money no matter what the market does. But these leverage ETFs, I'm going to tell everybody cautiously, unless you know what you're doing, do not get into them, because you're basically putting a bet that you're going to get a big move in one direction. And if it doesn't pay out, it's one of those things like, well, I'll just hold it now. Well, unfortunately, you're having time. It's almost like you're having deterioration on the value of it over time, because it keeps going down because it resets how the algorithms are set up on them. So it's an interesting tool. You can look at how they work and how they operate, but there's tons of stuff on this on the internet. Look for it yourself if you don't believe me. But just if you're going to hold them, they are tradable vehicles. They are not something you hold. When I say tradable, 2 weeks, 3 weeks max. You don't want to be in them longer than that because of the time duration that eats away at the value of them. Just wanted to put that out there for everybody.
Well, I'll say there's never a shortage in the supply of shenanigans when it comes to leveraged finance products. So,
heck no, man. It's just another form of gambling.
yeah, it is. I mean, obviously, nothing we say here is financial advice, but at the same time, though, I do think that the general consensus of the team is that stay away from leverage. You're already in the best performing asset class in history if you're in crypto. There's no need to get wild with it and just expose yourself to all the nonsense that goes on with it. But to wrap up the article that we're talking about here, I got 2 points to talk about here. Number one, ETFs might be pushed out a little longer than you expected. That seems like pretty classic government work, to be honest, which is that they're going to push it to the last day and then they're going to ask for an extension. And then the second one here is that I think that it's showing a bit of a trend, which is that if we're already at this point, then it means that people have already feel like they've squeezed as much as they can out of the other ETFs. It's crazy to say that, considering that a lot of them have not even launched yet. But if we're already getting this deep into the roster looking for coins to put on ETFs, I think it's a bit of a signal on its own. So again, timing, it's the name of the game. It's the other theme for the show tonight. I think the timing on this one is going to be interesting to watch. And like you said, if we get to meme coin ETFs, yeah, that seems like a bit of a top signal. And remember, in crypto, when we get to top signals, we dip hard. And things that are farther away from the highest market caps dip the hardest, aka meme coins. I would not be personally surprised if there was a lot of bad blood in the traditional finance market when inevitably top of the 4-year market cycle hits. And then if they happen to launch the meme coin ETFs when this stuff comes out and they lose a ton of money on it, we might see some people calling for some big changes. So that being said,
we've already talked about that. We talked about that. And this is my concern, that they want to let's play this out in the history. Let's see what we've already done and where we're probably going to go. So government stymied, the SEC stymied regulation on crypto and really chokeholded it and wrestled to the ground, didn't allow it to really take off. They pushed it down and suppressed it. Okay, my opinion, sure, a lot of evidence to support that. Then on top of that, the major players, institutions were buying it up hand over fist, that were telling everybody not to buy it. That was all happening for quite some time. When I say some time, heavily institutions were accumulating it in 2015. Fidelity was early. They were 2012. They were very early to the game. Couldn't even imagine how much they're sitting on. But anyhow, they were buying it. Harvard and Yale were buying it heavily in 2016, 2017. Big and underlying institutions were buying it. The Voselquins brothers were buying it. The former people who had the whole thing with Zuckerberg and Facebook creation, they were buying it heavily. Other big players and powerful people were buying it. Institutions are starting to buy it in 18, 19. And then they were starting to allow they're starting to figure out how TradFi was going to get into this, and they started figuring that out. Now they're pro crypto, but think about it. They were able to put all these things in place and ETFs and figure out how TradFi was going to somehow control as much as they could of this, letting the genie out of the bottle, trying to control as much as that they could. And they allowed the SEC to do that. Then once they had it in place, now they're trying to open it up. Now they're trying to open it up to the masses with ETFs. Now you're seeing crypto companies starting to go live with Circle onto the New York Stock Exchange to make more mass adoption. So if you think about it, then they're trying to regulate and do things. So then what they could do is now pump this up, get it going. Then they can dump everything. Institutions don't put this beyond them. They will then, once they get to a certain point, they will dump crypto. They'll dump it hard. And then the people who are not used to crypto are going to be like, oh my God, I lost so much money in this. Why would you tell me to get into this? You're right. We need to regulate more. So you're right. Government needs to step in and regulate even more. So then they're going to have people pounding the table, wanting more regulation to protect the investors. And then that's what's going to trigger more regulation into this area, whether good or bad. And then we'll probably at that point we'll be getting towards the bottom of the bear market, and then we'll probably start to move back up again. But I don't know. That's how I'm seeing this play out over the next few years. I could see all of that kind of unfolding. But they're going to try to they're going to try to bring in as many people as they can, and then when they can, that'll be the top signal, and then the dump occurs, and then people are going to be screaming for regulation, because they lost infinite amount of money. And you're going to hear all the sob stories. Oh, I lost, 50% of my retirement fund, blah, blah, blah. They're going to say, why did you allow us to do that? I mean, there's going to be tons of stuff coming out on this.
That is a plausible timeline.
That's my prediction.
It is my least favorite timeline, but that is unfortunately a plausible timeline that could unfold.
I mean, when I say that, I still think we're going to, with the big caveat here, we're all waiting on rate cuts. Rate cuts come out, man, we are pumping hard. Then you're going to have the crypto, the czars come out, the crypto committee, they're going to come out with the details on their reserve, probably have a basket of what percentage is going to make up that basket. Probably that'll come to unfold. That'll then pump crypto. And then once we get past that thing and we pump hard, at that point, we probably should be towards the end of the cycle. Right? That's putting us in Q4 of this year, maybe bleeding over into Q1, because Ethereum tends to run a little longer after Bitcoin starts to roll over. Bitcoin's typically that canary in the coal mine, at least in the last 3 cycles. We don't know if it's going to, it's to be determined if we're going to still follow that same trend. But then Bitcoin will be the canary in the coal mine. When it starts to roll over and start showing weakness, that's probably your indicator. Of course, the on-chain data will be screaming at you to probably start taking profits, or before then already, start to unwind your profits. And then that's when everybody in the world and your family is going to be saying, hey, I'm hearing crypto is this really good thing. You'll probably see something on 60 Minutes and everything else telling you to get into crypto. It's a great investment. It's this thing we don't know about, but it seems to be really good. You're going to see it all over the news and all the articles. People are going to be talking about it. That's the top
cycle
signal.
Will continue.
And Elon Musk will come back on to SNL and pump Doge again or something. That'll be the top. And then here we are at the end of the cycle, and then down we go again. That just like clockwork. It'll be something along those lines. And now, hopefully it's that simple and it's not some major financial crisis or something that puts us into that realm like debt or things like that. But I can kind of see that playing out on the long-term scale over the next year or two. So right now it's hold on. Personally, I'm just holding on, waiting for this thing to pump. I want to see it pump for everybody who's been sitting here patiently and weathered this storm going back to Q4 of 2022. You made it through the whole bear market bottom, and we're just trying to go up. So that's what we're here for. And we're along the ride all together here. Try to keep our sanity and bounce ideas off each other. So that's what we're trying to do here every Monday. And we do it in the DGen channels as well. And then also we do streams with Jay on the almost daily, if not every other day, on TA, and then on our group that that Zenith did a plug on us. We do that, and we do provide a lot of information in there, and a lot of good TA work that goes on in there. Then we do Will's helping out with transcripts, so we'll do the videos. They get transcribed out for our members. Everything gets dumped in there. So if you don't have time to watch the video, you can just look at the cliff notes and the transcribe notes on there. So if you want to know your coin, what's going on, you TA on anything, any advice, guidance, anything out there, that's what we're there for. And we're also working on trying to build a lot of stuff currently now with the noobs that are coming into the market that are new to this, so that we can guide them so they don't have to relive the same mistakes that we all made and pay the price. So giving them guidance as far as basically a mentor, asking those questions and what not to do and what to look at and where to kind of stay in. That's a safe area and not get destroyed in the meme world, things like that. So yeah, we're building a lot of stuff too. So a lot more stuff's coming, guys.
Well said, sir. That's right, folks. If you are interested in hopping into the Telegram, go over to walktheblockndf.com, go to the membership tab, and you can get signed up through there, and we'll get you in there as quickly as we possibly can so you can start hanging out, enjoying all the streams, all the content, all the chats going on there. And by the way, for everybody out there, I'm going to start calling y'all navigators, by the way, people in the Telegram chat, all my navigators. If you have any questions about the stream tonight, or we did not get to any of your questions, please hit us up in there, shoot us a DM, whatever it is. We'll get it going. We'll make sure that we answer all the questions and keep the conversation rolling. But outside of that, Tracker, always a pleasure talking with you on stream, sir. Anything you got going on, or where else can they find you?
Just in the same place we've already said, the DGen roundtable. We're in the chats there. That's a free area community that's been built up. There's like 440 people in there now, 430, something like that. It's in there. A lot of good discussions going on in there. And then we have our Walk the Block private channel for members that we did a shameless plug for that allows you to get in there and really get more of a white glove. Like, what do you need? What questions do you have? What problems are you running into? And then not just that, but also sometimes people who are new to crypto don't even know what to ask. So we're starting to lay out a lot of crypto 101 stuff and trying to lay that. We've been talking about it off and on now for a month. We've got a lot of stuff built out. We just got to now do some recordings and plug that out for everybody. So that's coming. Yeah, we're looking to try to bring in people from the outside that don't understand this, because there's a lot to digest, and we're going to do it in a nice little roadmap fashion for newbies that are coming to the markets to get them kind of, laid out the transition phase, so onboarding people. So that's going to be coming. So really excited looking at trying to get all this stuff built out, and then creating that safe community area where we're trying to really protect everybody. Because unfortunately, yes, crypto is the wild, wild west. I don't care how much U.S. regulations coming out here. That's still very much rug city. Hell, even the central exchanges are getting rugged half the time with hacks and stuff, with all the hackers coming out. Just on a side note, I just watched 60 Minutes. I very rarely do I ever watch it, but the big thing is talking about how bad the scammers are getting out of control. Like the white hat hacking teams that get hired by companies, they're overwhelmed. They're at this point, they're just overwhelmed. And I don't just trust that for the source of truth. I looked at a lot of their stuff, and they really are. The hacks are getting up. They're starting to grow exponentially with AI and various tools they have at their disposal. So it was definitely a time to hunker down with a community and try to stay protected. So that's what we're going to be working on, where we're going to find us.
Well said, sir. And by the way, if you don't want to join the Telegram just yet, I understand. We'll get you in there soon enough. But you can catch us on Monday, 8 p.m. Eastern time on YouTube every week. That's where we're talking about everything and talking about everything going on with crypto and what's going on. Outside of that, though, folks, thank you so much for tuning in. I am Zenith. You can catch me on Instagram and X over at ZenithDI. But outside of that, I hope that you guys continue to navigate the stormy seas safely, and we'll catch you guys next time. Good night.